morning. All right. I just got to find the music. There it is. Alrighty. Welcome. It's Tuesday. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis, watch retail sales, set up trade plans, Q&A. That being said, this is a difficult gig, man. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I've been doing this a while, almost 20 years, I guess, probably closer to 19 years as a full-time foreign exchange trader. I also have a bachelor's degree in macroeconomics and a master's degree in financial management. So we can talk about a lot of different things, both technically and fundamentally. Let me know how I can help, and I will do my best to serve you. I consider myself here a servant leader, so to speak. So let me know how I can help, and I will do my best to do so. Ask questions, get involved, treat each other with dignity and respect. Check your negativity at the door. This is your temple. This is your hour of power. In the description below the video, there are resources to my book. There's resources to Trader's Way, which is a ethical foreign exchange brokerage firm. There's a link to free training courses. There's a link to premium training courses. And by premium, I mean 65 hours of hardcore training videos. 65 hours for a whopping $88. Fair, right? Fair. And I think they're going to have a positive impact on your trading. So great. So take advantage of all those resources. In particular, Trader's Way, you want to open up an account there. Even if it's a demo, give them an opportunity to earn your loyalty and respect like they earned mine. Fast execution speed, narrow spreads, great swaps. Look, that's what you need. Also, the way that they behave indicates to me that they don't trade against their clients. That's my personal point of view. Okay? And I get that from the Swiss National Bank depegging of many years ago. At least 2 major foreign exchange brokers went out of business that day. Apparently, they were not executing their client trades into the interbanking system. And they went out of business that day. Trader's Way was perfectly fine because they actually entered those trades. So there you go. That's how I made that conclusion through the real world actions. So tradersway.com. Also, if you could, would you help me try to get this channel promoted a little bit more by YouTube? And so if you can leave a comment on the recording or click the thumbs up button, that would be appreciated. Also, I'll apologize now, maybe once or twice in this live stream, I will run an ad. I'll click a little button. And that's for YouTube to make money. Okay, so lots going on. We had Walmart report today, which is probably more educational than retail sales coming out. Because if you think about it, there's a Walmart in every little town in America, in every region, in every state, in every little town, right? So what happens in Walmart is indicative of the whole entire country, and people are still shopping. So that's interesting. But later today, we get the government's version of retail sales. So we can contrast and compare. Also, there's a lot of Fed speak today. Bullard, Powell, Mester, and I think one or two more that are not on this list. Maybe they're considered low impact. That'd be funny if you were downgraded, like, oh, you're not as important as Mester. But anyways, I thought there was one or two more. Okay, the housing data I think is also, and I talked about this yesterday. I think this is actually quite interesting. I wouldn't have put it low, but you know, whatever. I'm not a professional calendarier. So anyways, just, I mean, this, obviously it's the retail sales number that is going to move our session here, but pay attention to all these speeches as well. Okay. Okay, oil at 14.5. Is it a buy? What do you think? Oh, we traded oil yesterday, right? How many people remember that? Unfortunately, I think now that I've changed the template, I've taken out the analysis. Remember, I drew an arrow and then I actually took the trade. Does anyone remember that? Well, Jim, I know you remember. Yeah, I know you do, Jim. I'm talking to like the newbies. I did a 111,333, right? 111,333 OCO, and it was a winner chicken dinner. Bought it around 110, I think it was. I bought it at 109.76 and took profit at 113, which sucks because it's at 115. Anyways, just want to catch you up. Winner chicken dinner. All right. Sorry, I'm a bit slow today. So we got retail sales. Make sure we got that going. Hang on. Let me bring up another news source for that. La 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 la. I'll bring this up when we're a little closer. Man, this is Oscar Mike already. Man, always when I'm coaching, huh? Always when I'm coaching. All right. Shouldn't talk like that. That's negative. Okay, so anyways, I drew this gray line or gray box around here. Okay, just kind of connecting all these joints. Well, it won't let me know. I can't get in there. There we go. You see what I'm doing? So we're at that inflection point in the day where it's either going to go up or it's going to go down. Do I analyze the COVID situation? Yes. There were no new cases in Beijing overnight. What source are you using, Daniel? Meta says all recipients of Medicaid here in Florida have a $225 monthly allowance to buy at Walmart. Interesting. Who? Don't answer that. Of course I know who. Bum 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 ba-da. Anyways, anywho, I believe that maybe it was Shanghai reported no new cases, but Beijing still has. Anyways. Okay. Man, more coffee. Gee whiz, I need more coffee already. Yeah, Shanghai had no community cases, which is getting close to their requirement for opening up that economy. No, that's right, Andrew. But I hear the Biden administration is talking to Iran to maybe get them to produce oil. And I don't know. I have, let's say, at best, mixed feelings about that. So anyways, yeah, so Shanghai doing better, but Beijing still is kind of status quo. But we have to understand that, or we should remind ourselves, is what I'm saying, is that there's a lot of different cities that are in lockdown. Okay, so that's an interesting breach. I was hoping to see something like this in London, not New York.
And we're seeing exactly the opposite. It makes sense. So take those internal conferences. That's something a lot of people said. We're not going to need to do those internal meetings anymore.
All right. Sorry, I know I'm slumping. I know. I'm waiting, man. I'm waiting. Let's do some yen pairs. Okay. Okay. Uh-oh. Okay. So we're nearing the top of this rotation. Okay. So what has been happening? Oops. Sorry. This is my mouse. I don't know. I thought it was my battery. It's just not. Maybe my mouse needs to be replaced. Okay. That's all. I know. Let me see if I can get this more accurate. Okay. No, that's it. If you're going to measure from this high, that's it. So we're in a zone here. If you're going to use sort of, I don't know, like I say, when I explain Fibonacci, I really like to keep Fibonacci below this area. Now, this could wick and come back around, and then I would call it a 618. There's a 786 somewhere in here, 78.6. If we go up that high, there's very much a potential for a reversal. But as long as we're sort of at or below this price, which is a measurement from here down to here, okay, there's still more than reasonable potential for continuation downward. Now, price action would have preferred this one. Okay, Fibonacci is preferring this one. And any higher kind of sets this up, this area here as support. So, for example, if it goes higher, then you would probably look for a scenario like that. I hope not. I hope not. Okay, I hope not. About 10 minutes away from the news here. So anyways, I'm waiting my turn. Waiting my turn, right? I'm like a ship at sea waiting my turn. Lower low versus this low versus this low. Okay? Lower high. So I'm waiting my turn. At some point, I'm thinking of a continued lower low. Maybe into here. Maybe I have to adjust the rate of change. But this idea, okay, is still in play. And I just got to wait my turn. Not now, not now, not now, not now, not now. Okay? Not now, not now, not now. Wait for it, wait for it. And right now, if for those that were bulls, so there was somebody in the day trading group when I was setting up, a move like this. He was saying, no. From his point of view, he saw it this way, and I'm like, good, totally see it, totally understand it. I don't disagree with you. I think you'll probably do well, but even if you're wrong, you'll do okay. And then it'll allow me to get into my trade. But at that point, I'm not in a trade because I took profit down here for the same reason he was thinking up. And I'm like, cool. So you should do it. You do you. If you're a bull, you're going to look for these things. But it currently, at that time, here and here, is still a counter trend trade. And I don't like counter trending. So I sold and then I got up. And so the next one could be up, which is fine. So if you're a bull, you'd be on that. And meanwhile, I'll sit around as a bear because I'm still a bear. I will wait my turn. And I did the typical story in a situation like that. I insert the speech about trading being a symbiotic relationship. So it's your turn. If you're a bull, it's your turn. Make your money. Cool. I hope you got it. because at some point there might be a new opportunity for me as a bear. Cool. And I would still argue technically, these are levels of resistance. Okay. And even the one that didn't work, okay, that's a neckline faux show. Okay. So, I don't want to see this. That's too high because, again, a move like that can, it sets up this range. Okay. And so what I would prefer as a bear is that we get a lower high, not a full range, because then it sets up this. Okay. Because a lower high sets up a lower low. Okay. So I hope we don't range it, because then it just gets gobbledygook. It's bad for all of us if it does this, because then you can get breakouts and fake outs, and I don't want to see that, of course. So cool. So bulls, I'm glad you're doing well, but be careful. I think this is going to be tricky. You can change your point of view here, of course. You should do all of that. So I'm a bear, so I can start like going through the motions here. I could say position trading bearish bias. And, okay, bears sell here for the month. Cool. Now let's do swing trading bearish bias. Okay, we're up and through. So really, right? Really, and this was the sort of the walk away inflection point for the week. Okay, but we can still prepare for next week. And then we look at daily bearish bias. And remember, this is tomorrow, right? This is today's, this is tomorrow's, but remember, tomorrow is being impacted by now. So we have this series of up and up and up and up. So what we would kind of want to see is a change in direction, maybe today, and then maybe tomorrow you get something like that. This might even take 2 days to roll over. So right now it's like, if you were a bear, you're too aggressive, I think. Okay, you're too aggressive, I think. Okay. Okay, this one actually rolling over now. Got to be careful though, because that 21 support. See, this is all support. So a bear really needs to like breach this, and then really set up a lower high like that. Okay, keeping my eye. We're about 3 minutes away from the news. So anyways, for a bear, that's hopeful. For a bull, it's probably a buying opportunity. Okay. Okay. Retail sales coming out. So again, Walmart reported this morning, which is a good broad overview of economic activity for the average American, and sales are fine, per ticket item is fine, so on and so forth. Same stores and other comparables are fine, but they also indicate that they had to eat a lot of costs, and that employees and the supply chain and fuel costs and inflation on the product level, it was all greater than expected, and that some of that came out of the Walmart margins, but eventually is going to get passed on. And so I think there was a time when Walmart was down 6%. So I'm not sure. Walmart stock. Okay, coming out here any moment. Let's move over to euro dollar just for something neutral to stare at. I don't want to play the sound. I think YouTube slaps me. I'm not sure. It'd be nice if they actually posted it visually. Well, if you raise taxes, you have less money to spend, and that would be deflationary. Okay, so there's two ways to look at it. There's supply and there's demand. So if you have less money, right, there's less supply of money, so there's less spending. The other one is to make the cost of money higher, and therefore it kills your demand because it makes buying more expensive. So you either have less money or money is more expensive. One is interest rates, one are taxes. What the sin of it all, because there's not good or bad, either way it's going to impact the economy. But the real sin is when the central bank cuts interest rates to incentivize more spending, and then the government comes around, because the central bank isn't necessarily the government. So then the government comes along and raises taxes. And you're like, well, that would be stupid. Well, like Japan did it, for example. They cut interest rates to increase demand, but then, right, by making money cheaper. But then the government came along, raised taxes, which means you just had less money. So the central bank tried to create demand by making money cheaper, but then you had to pay more in taxes. So your cheaper money, instead of creating demand for products and services, just went to the government, and they wash each other out, and they look like fools. And I was bitterly disappointed when they did that. That's right, Andrew. But the thing is, Andrew. So Andrew's talking about no cars being sold in China. So car sales in China are way down. because you don't need to drive when you're locked in your apartment, nor could you, if you wanted to drive, leave your apartment to go buy one. So here's the thing though, Andrew. When you let people out of their apartment, they'll go buy a car. If you needed a car 2 months ago, you still need a car now when life goes back to normal. So that'll just happen. Now, the thing is, they'll probably sell every car on the car lot, but then it'll take X amount of time, I don't know, or N periods of time to make new cars at the factory once people go back to work. So, okay. So it'll be choppy, but it'll normalize. Okay. Now, Andrew, it's a real problem if we had a normal economy. So like there's no government influence. There's just supply and demand. Okay. Everyone's free to go about, do whatever they want to do, buy whatever they want to buy, sell whatever they want to sell. We have a true free market. In a scenario like that, Andrew, if China didn't sell any cars, that would be a problem, right? Right? Now, no cars are being sold. Right. Now, that's an eye-opener, huh? Now that's an eye-opener. Holy smokes. That would be a crazy problem. But I don't think it's shocking to say people didn't buy cars because they were locked in their apartments. Oh, well, that makes sense. But if nobody wanted to buy a car, or could afford it, or had money, or whatever. Okay. Yeah. All right. Sort of last level of support here working out. We'll see. Got to be careful. This is a turning point now as resistance. Sunday Cola. In the description below the video, there's a link to free training courses on YouTube. You don't have to sign up with your email or something like that. It's just YouTube. And there are 4 videos in which I outline my charts and my strategies and my techniques. It's all right there, Sunday. So please do that. Okay, so again, I'm talking about, how should I do this? Now I got this in the way. I'm talking about this now potentially acting as resistance. It was support. Okay, so that's from a bearish point of view. A bull is probably going to, allow for some up and then maybe range trade and then break and then range trade. Okay, but right now, a bull might be there, but a bear might be there. Okay, so you gotta, I don't know, wait your turn. Remember, bulls buy low, bulls buy double, right? Bulls should buy, at support. Okay, so a bottom. Very often we talk about double bottoms, but not one touches. In this case, it's not. A range is kind of a form, if you will, if you let me be liberal with my definition. Okay. a bull can buy a bottom, like a double bottom, or they can buy higher lows. Okay. A bull can't buy here. A bull cannot buy here. Okay. What would a bear do? A bear would consider here or here, because a bear would consider this resistance, and a bear would consider this lower high. Okay. Both are valid. There isn't right, there isn't wrong. It's whether you are a bull or you are a bear. Okay. Notice the symbiotic relationship. It's the same price. A bull would buy around 15. A bear would sell around 15. Notice there's no good or bad. It's the same price and basically the same trade. What happens, though, is amateurs get caught in the middle doing some mediocre version of both of these things right in the middle. So Walmart is still down 6%. You can buy it for $150 a share. Well, 148. Okay. But it's not much of a discount. I think the all-time high was 160. So, it's up 88% over the last 5 years. It's even up year to date. Although when it opens today, it'll probably be flat for the year, but that's good compared to the rest, huh? Okay, let's quickly take a look at the indices. CAD getting crushed. Okay, yen weak, dollar weak. Okay, Aussie's still fairly weak. Wait, why is that on a 4-hour? Wait a minute. Wait a tick. There we go. So, okay, the commodity currencies are weak. Aussie's like modestly weak, but CAD and Kiwi are quite weak. Okay. So it's more like, was there profit taking? Remember, all this started Thursday afternoon at noon. On Thursday afternoon at noon, I stopped buying yen in particular. And that would have been right here. So the question is, have the fundamentals changed? Okay. Have the fundamentals changed and everything that was going up is now going down? Or is this like, for those that, like, again, at this in the upward period, right? So for example, let's put it this way. In this period, I was buying yen. And at that period, I stopped buying yen. Cool. So do I buy yen again? In particular, everybody else as well. Will they buy? So we don't know. And the question is, has anything fundamentally changed? Is this Shanghai opening in a couple of weeks? Well, yeah, maybe. Is it because of technical, market technicals? Again, the question is, if fundamentals haven't changed, is it market technicals? Well, that's why I got out of here, market technicals. So, this could still be the near future, and so I just wait my turn. But if something has fundamentally changed, then there'll be a reversal, a big reversal, and we'll see. Okay. Okay. So one of the things we might want to look at is, like in the day trading group, one of the things we spend a lot of time on is this. 10-year JGB. Let me bring it up. Okay, we watch this. Okay. And so far, it doesn't suggest a major change. Ken Aparian says, hey, can I trade only a single pair? I dedicate an entire chapter in my book answering that question. You'd have to think it through. Why would you want that? You'd have to understand the mechanism and mechanics of the foreign exchange market. What benefit would you get? Right? Like, what would the logic behind it be? Well, what is it that we do? What do foreign exchange traders do? Okay. Well, you would want to ideally combine strong versus weak. What you're suggesting is you would ignore all of that and just trade an asset, whether it's strongly trending up, strongly trending down, strongly trading sideways. You would buy or sell it irregardless of market conditions, irregardless of central banking policy, irregardless to monetary policy differentials and interest rate differentials. You would ignore seasonality. And suddenly that doesn't make any sense at all. Now, the danger is you found somebody else on YouTube and they say fundamentals are stupid and you don't need all that nonsense and everything is in the price. And so you would just trade your euro dollar all day, every day. Okay. But probably doesn't make sense. Tyson bringing in Trump today. Cool. That does remind me, though, there's some parts of the United States have elections today. Lewis is trading the stock market today. Cool. I got it over here somewhere. Whatever. I don't know where it is. Got too much going on to cover all that. But anyways, JGB yields The reason we follow this at the day trading group or in the day trading group is because of the Bank of Japan's yield curve control policy to manage qualitative and quantitative easing in Japan. So we watch that a lot, very closely. Okay, cool. So I'm waiting my turn. If dollar's weak, that'll be good for the exotics. But so you'll have to play with those. I'm kind of like I'm eyeballing this a little bit. Okay. I'm eyeballing this a little bit. So what if we can go bigger time frames? I always like to remind myself like where we are. So let's do like, let's go really big here. Okay. And we haven't even tested the 21 EMA on the daily. So, I don't know, as we approach 71, so there's 50 to 100 pips above us, less likely, doesn't mean not likely, but less likely to continue up. Okay. Okay. That high predicts that we're going to head down to 66. If you're going to use that analysis, that's what it means. Okay? Now that is a support pivot. That's a big one. Gotcha. But if you're going to use sort of price action, moving averages, and pivot points all combined, you would sell, let's say, 71. Conservative target is 66. Yeah, it happens, Zach. Okay, it happens. You might want to confirm your entry strategy, right? Did you get a technical entry on a 5-minute chart or a 1-minute chart, that kind of stuff? But sometimes, you do what you need to do, and you do something like this, like sell there, and then and that's that, and it goes way up to the 55. Yeah, that happens, man. Oh, those are not Wyatt pivots, no. And then this just goes back to the previous conversations. Bears would sell there, and they did. Okay. Doesn't mean it'll follow through, but that's why bulls don't buy at that price. So now it's coming down. I don't want to search for my stock market charts, so I'll just open a new one. Okay, this is tradersway.com, by the way. I'll paste it if you want to go. All right, so I find this very helpful. So I just click empty web. Notice I'm not even logged in. I want to track the stock market. It's only on the MT5 version. So I flip that over. Okay. Cool. And there's the stock market. It remembered the chart template I had set up. These are just fractals. You can kill that if you want. I also have this plugin called Floating Player, and it pops this out, which is another sort of trick tip of the day. So now even though this is a web version, now there's no browser. You see? Like there's no browser. Now it's just like a normal trading platform, but this is the web version of MT4. But now, because there's no Chrome, it's cool, right? So anyways, this is the S&P 500 on an hourly chart. Okay. So you might want to mark sort of a buying price. This idea. Oop. Maybe there's some up coming in our future. So you got to watch these peaks and valleys. So the way that I use fractals, I don't know if I like this particular type of fractal, but it's just the standard one on the chart. Anyways, what I do is I try to connect all these as a visual means of seeing support and resistance. Okay. So you would want to kind of breach above, right? And that would be more bullish. And right now, falling is bearish. Cool though, right? So this will give you direction in the foreign exchange market. This is why even if you don't trade it, you might want to watch it. So ask yourself, what has happened in the last 24 hours with the dollar? Some of you are surprised that the dollar is suddenly weak. Well, what has happened over that period of time on the S&P 500? The stock market went up. So what could you conclude? You could conclude that there is an inverse correlation between the S&P 500 and the dollar, which is a fancy way of saying if the stock market is going up, the US dollar is falling. If the stock market is going up, you're probably buying pound dollar. You're probably buying euro dollar. You're probably buying Aussie dollar. You're probably buying Kiwi dollar. Also, you might say, well, that's also true of the Japanese yen. If the S&P 500 is going up, you're buying Aussie yen, you're buying Kiwi yen, you're buying CAD yen, you're buying euro yen, you're buying pound yen, so on and so forth. So now you understand potentially the correlation. The question is, what's going to happen today? Is it continue to up, or is it a dead cat bounce and we're going to head back down and test old lows? That is how you make money. You're like, well, how do I know that? How do I know the answer to that? That's what you're supposed to be trying to figure out, son. Okay? Which moving average? It doesn't matter. Any moving average, okay? The thing is, the moving average won't predict the future. It only tells you what has been happening. Okay? So you have to ask yourself, do you think up today, or do you think down today? And when you make an answer down, okay, when you decide, then you go to your charts and look for technical setups. Okay? 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 Now, here's the thing. At this point, okay, I was fully deployed. Okay, this was the last day I bought stocks in the market. That's the last day I bought the stock market. Fully deployed all my capital. Okay? But I'm going to hold for 20 years. Okay? But still, okay, one might argue from there, I thought the stock market going up. Yeah, whatever. Okay? Now you got to go day by day if you're a currency trader. Do you think up or down? Okay, risk on, risk off. And from there, you would make your decisions of what should you be doing. Okay? Oh, Luis and I are the same. Cool. I mean, the funny thing, Luis, is like, or Lewis, is it Lewis or Luis? Luis. There is no other way. That's the thing. We're in the same boat, but there is no other boat. You're either doing this or you're in the water. You're treading water at best, drowning most likely. Everybody else is on the boat, sipping tea, listening to violins all day. There is no other way. But you are quoting my book, which I appreciate. And the training courses cover all of that too, so appreciate that. Joe Schmo says, Wayne, is there any reason that this would change? When I mean policy from the central bank, are you? No, because why would, like, think of it this way, Joe Schmo. Why would a central bank change its policy? Okay, that is the fundamental reason which drives all of this. So it's just how it is, man. I mean, right? It just is. It is what it is. The fundamentals are the fundamentals. It's the reason for everything. So sometimes the market leads. How do you say it? Market price leads the market forces, and market forces then lead the prices, but they're all the same, right? The price, that's the interesting thing. The price and the market are related. Okay? So, like, if we go back in time, when the government and the central bank of the United States put free money into the market, the stock market went up because that's what happens. Okay? And then when the government and the central bank remove that money, the market comes down because that's what happens. So they're intertwined. But when the central bank changes policy, I want to focus on that. What we do as currency traders is trade the change in central bank policy. Okay? That's the whole thing. So when we analyze news events like today, we had retail sales. Who cares? Because it could possibly change the central bank policy. And if it does, that changes the value of the currency. So when we analyze a series of data points of economic releases like retail sales, we ask ourselves, okay, is inflation way up to the point where the Fed has to raise interest rates to 4%? Well, if that, first of all, is not priced in. We're thinking 3 to 3.25. So if the Fed has to raise to 4 because there's even more inflation than we thought, okay, that's going to create dollar strength. That also needs to be priced in, like literally in the pricing or valuation models of stocks, which would mean the stock market would come down. It would come down. Not because I think it would come down, because I think people would think those numbers are bad, but because it's simple math. It's like math. The future value, right, of the stock market, the present value of the stock market is the future value of those revenues that those companies are earning over 1 plus I, which is the inflation level or interest rate level, to the end periods. And if I goes up, this goes down. So if I is up, then the present value of those stocks falls. So if inflation or retail, right? If those numbers, if I is going up and then we say, oh my God, the Fed's going to have to raise interest rates even farther than we thought, the stock market will come down factually because the valuation model of every analyst on Wall Street is going to say, well, I has gone up. And then you got to do this for every year. So next year, the year after. And so next year will be at, 3, and then the year after will be 4, and you start doing all this. And the present value of all those future cash flows, which is the basis of a stock valuation, well, the stock market comes down now. The present value now. So this is what we do. So if we think inflation's peaked, then maybe buying is great. We've fully priced in 3%, and then everything will be under control. The Fed will not go higher than 3%, and therefore the stock market has hit a bottom, and now you would price that in. So, for example, you would do the present value, okay, is equal to, the future cash flow, whatever the future cash flow is. Okay, the future value over 1 plus, we'll say 0.2 for year 1 plus the future cash flows over, 1 plus 0.3 to the 2 plus 3 years from now cash flows over 1 plus 0.3. Notice that it's maxed out to the 3. So the question is, how much money do you think this company or whatever we're valuing, how much money will they make this year, next year, and the year after? And notice that we fixed 3, which means interest rates are not going up any further, and that we're here now and we're going there, and then we're going to stay there. That valuation model would come up with the value of the company now. But if inflation data comes out worse than expected, then people start saying, well, what's the math of that? If this is going to go to 0.4, then the present value is down. Okay. Okay. Tim says, do central banks control the government on the globe? I don't understand the question. Central banks monitor money supply. And central banks have mandates. Some have one mandate, keep inflation under control. Some have dual mandates, which are keep inflation under control and keep the economy healthy. Actually, I should take the other one back. The single mandate is usually keep the economy healthy. So there isn't much the ECB can do when it comes to, really either, because Germany and Greece are just two different economies that need two different policies. But the ECB, the way it's set up, can only do one policy. So do they save Germany or do they save Greece? And what they do is neither. And they do a mediocre job of that. Okay. But central banks just do monetary policy. That's all it is. They don't control the government. Okay. So anyway, so what we do, guys, is fundamental analysis, is say, what's the economic data? What does it point to? And is this priced in? If yes, then we've already figured out the present value, and then we get to a point where everything is fairly valued. Okay, if this is not priced in, the price has to fall. If we start to get data in the near future that says, you know what, this is actually wrong. Inflation seems to be tempering and not going up. So it looks like a 5. That's a 3. Sorry, my mouse is so bad. So instead, we were wrong. It looks like the Fed won't have to raise. Wow. The Fed won't have to raise interest rates as high as we thought. And so let's take this model down. So in year 3, it's back to only 3% interest rates in the United States. And therefore, this dropped from 4 to 3. Therefore, the stock market will rally because the Fed is not going to raise interest rates as high as we thought. And we had already priced in based on our valuation models, but the valuation models have to be updated. So we had too much strength in the US dollar. The dollar will weaken and boom, thump, math. Now, if you're truly a quant, you're going to do some of this, and then you're going to also look at how the market is trading, in particular, probably on the smaller time frame, and find out there is a mispricing, that the markets are inefficient. Okay, but the market's pretty smart. So like when I said, like on the yen pairs, that I stopped on Thursday at noon. I don't remember which one, but let's do this. Wide Friday at noon. And I think it was this one. Yeah, okay. Why Friday at noon? Why did I stop selling and take profit right there? Can anybody figure it out? See, Lewis is still talking fundamentals. You need to translate that into monetary policy. Okay. Yeah, look, I actually have it labeled profit zone. Look how precise it is. Okay? So the thing is this market random? Let me also point out that this is the exact price you're supposed to sell as a bear. It doesn't tell you to be a bear. You need to be a bear. Okay? Okay, cool. So, is the market random? That's the sell. And if you sold there, you're supposed to take profit there. I'm not joking. That's in my book. You should buy my book. Wait, the book's like $80. Then watch the training videos for $88 a year. Right? Anyways, the thing is, I don't think it's random at all. And that I now have to decide whether this will roll over and fall and we continue this trend. And to get there, I have to ask myself, has anything fundamentally changed? The biggest thing that I talked about on the way down, by the way, was China reopen. And maybe that's happening now. Cool. Well, I'll get out of the way. I'm not selling this at the moment, but I probably will. If not today, tomorrow, depending on what happens. And that's what technical analysis is. Okay. So cool. So I'll wait. Okay. Okay. So I'll wait. We'll see. Cool, right? Andrew said, would Biden's idea of dropping China's tariffs motivate them to open sooner? No. They're dying of a disease, Andrew. I think people locked in their apartments are not wondering what Joe Biden's going to do next. And I don't think the government's sitting there like, well, we have people dying of a disease, but if Joe Biden... No. But what are you getting at? Increase global trade is good for the globe and will weaken the dollar and lower inflation in the United States. And you're like, well, why would it lower inflation? In particular, Wayne, why would inflation fall if the US dollar is weak? Wouldn't that increase inflation? Well, for most people, for most countries. But in the United States, what would happen? We're exporting dollars, so it weakens the dollar, but we're importing products and services that are cheaper. That's deflationary. And if the supply chain is fixed and we can get those products and services, much of our inflation has nothing to do with the interest rate or the value of money. Okay? The dollar's strong and we have inflation. It's weird. It's backwards, isn't it? I know. It's always been backwards. So what we want is to be able to buy stuff for cheap. So we need foreigners to make it cheap and ship it to us, and we need to receive the products and services, and we'll send out our money. Okay? Okay. So we have a supply chain issue, but we also have this other issue, and everything gets blown out of proportion. And maybe, I'm a stoic studying stoicism. So I never get excited about anything. So that's also a weakness for me. So maybe I should be in panic mode, but I'm never in panic mode. Right. Oh, cool. Now I lost my train of thought. That's how frightening. What was we were talking about? Supply chain issue. I suppose we were talking about the supply chain issue. And what was I saying about panic? Panic mode. Sorry, I got like 5 things going on right now. Well, I don't know. I don't know what I was talking about. Hey, thumbs up for that. I don't know. What was I saying? Supply chain. But maybe I should take. Maybe dollar weakness or dollar strength. The economy. No, I don't remember where I was going. Trade. We were talking about trade and open borders. I have no idea what the hell I was talking about. It was panic or something, or emotion, or why would I bring up stoicism? Yeah, Johnny. Yeah, definitely a concern. Definitely a concern. Yeah, that's all I can say. Definitely a concern that it's high enough. So we can take a look at various versions of this. Okay. Under normal market conditions, the value of oil was not supposed to be higher than $108. Okay. But $108. Actually, 108 and a half. Okay. Cool. So now looking at this, the trade was here. Okay, and I bought that. And the target was here. Okay. Cool. So is it done? Yeah. But it might look good back at 110. But can come back all the way to 102. This is the end, my only friend, the end. I'll never trade WTI again. So now we can go here. Okay. Now, what could happen is what we call an Arctic turtle, where it goes zippity-doo up and then come down. So this might threaten 119 before the drop, but we don't know. Yeah, well, that makes sense, Johnny. that makes sense. It's going to be uncomfortable, but it might work out. Okay, so anyway, so what I do is I do a confluence here. So I look at monthly and weekly together, and then throw in even daily pivots from a bearish point of view. And so you can see the real number here is $1.18, $1.19. So we do one of these and then down. But, you know, this could be dangerous where you could have a big drop and then a big pop and then a big drop. And, you know, the volatility slices and dices everybody. No, that was Jim Morrison. The trader awoke before dawn. He put his boots on. He took a face from the ancient gallery and he walked on down the hall. And he came to a door. And he looked inside. Euro? I want to trade you. Yen? I want to. Yeah. Anyways. Oh, the young kids don't know all the classics. Also makes me think of it, Into the Heart of Darkness. Kurtz. Oh. There's a line in the book/movie where he's talking about pilots in Vietnam getting reprimanded for painting, painting on the side of their airplane. And then sent out to napalm villages. Right, the pilots are yelled at because they paint words or images of girls or bombs or something on the side of their airplanes, and that's bad, but you can napalm people in a village. And it's just such an interesting piece in the writing. You guys know what I'm talking about? Nobody knows what I'm talking about? All right. Do you remember the line, though, Jim? And you know the book or the movie, but that particular line always sticks out. Yeah. It's the one, right, Jim? It's the one where, again, Kurtz is, talking about how pilots are painting, swear words on the side of their airplanes and getting in trouble and then sent out to napalm villages, burning people alive. That's cool, right? But painting on the side of your airplane, that's bad. And so anyways. Yeah, you're right, Joseph. Well, it's bad for everything. It's just not good. Okay, typically it's socialist pig dogs that tariff. Right, you'll get like Central America will tariff. Now you might argue, well, you're like, well, Trump was tariff boy, right? True, but I believe his intent was different. But what can I say? The difference of doing and the intention of doing. What was his intention of doing? To me, a businessman renegotiates contracts. Right? And so that's what I believe was going down. But nonetheless, any tariff is inflationary. Yeah, it's such amazing writing. The use of language is quite good in that book. Like it's almost even hard to read out loud some of the writing of that book. There's a quote here. I have wrestled with death. It is the most unexciting contest you can imagine. It takes place in an impalpable grayness, with nothing underfoot, with nothing around, without spectators, without clamor, without glory, without the great desire of victory, without the great fear of defeat, in a sickly atmosphere of tepid skepticism, without much belief in your own right, and still less than that of your adversary. Just like, you can imagine page and page. You'd have to read everything 3 times, but it's just like, it's great use of the language. Yeah. It's just so powerful. Anyways. Yeah. Anyways, maybe worth reading. All right. I think I'll leave it. I'm just the stock market's open. I got to do some things, but I'm just, I'm gonna be quiet. So I'll wish you adieu. I'll see you guys this afternoon in the day trading group. Invite everybody to visit fxbootcamp.com and maybe even join. And I invite everybody over to tradersway.com, maybe even open up an account. Peace on earth. May the pips be with you. May our profits be above average.